Welcome back, everyone, to Pickers Market. I got a little bit of a cough here, so I got a little bit of a raspy voice. So we'll get through this thing anyway. So myself, Keith's here, and we got a little bit of Kyle action and Lisa like normal, and we got our special old guest OGs back in the house. Tyler's in the house. Welcome back, Tyler.
Thanks for having me.
Yeah, I'm sure we'll see you around
Excited
more.
to be back.
Yeah, it's good. So we'll get this thing started. It's been a busy week. We've been in earnings and Fed announcements and a bunch of other stuff. So let's start covering some of the fun stuff. But before we start, we'll talk about our two truths and a lie. So we got a Fed announcement from President Trump last week. So I thought it'd be interesting to talk about the Federal Reserve a little bit and kind of two truths and a lie. I think this will be a good one. A, there have been 17 Fed chairs in the history, and the next one will be the 18th. B, there have been only 4 Fed chairs since 1987. Or C, Fed Chair Arthur Burns is considered one of the worst Fed chairs for failing to control inflation. I'm going to start with, who should I start? I'm going to start with Lisa because she's kind of all excited this morning about stuff. So I figured we'll give her a chance to go here first.
Lot of numbers, so I guess.
Keeping you on the edge of your seat this morning.
Yep, exactly. There have only been 4 Fed chairs since 1987. That sounds low, but the terms are long, so
I don't know.
Me neither. I go with A. I think you changed something. It's probably not the 17th Chair Powell, and the next one will be not the 18th. It's probably something like 16 or something like that. I go with A.
Okay. Tyler?
B is true, right? Because you got.
I know it's not many,
Bernanke,
but I don't.
Yellen, Powell, and then why am I blanking on the 4?
Greenspan.
Thank you. Yeah, I'll go A too.
Kyle?
I'm not familiar with Arthur Burns, but I could believe that to be true because Volcker came in the 70s to squash stagflation after that period. I don't know if it was right after, but it was in that wheelhouse. I'm going to say Burns stinks and go with A as well.
Wow. Easier said than done. You guys got it all right.
Oh,
nice.
So I thought what was interesting is I knew there's been only a few Fed chairs since 1987, but 4 surprises me.
But the number is really low since 1987.
Their terms are what, 10 years?
Well, I don't even know what their terms
Greenspan
are.
was even longer than that. His was, I don't know, it was like mid-teens. So, yeah.
He was around for a long time.
Yeah, so he was a long, I mean, think about that. So what do we got? 87, that's 13, and 25, that's 38 years, only 4. I was shocked. Anyway, there have been 16 Fed chairs in history. The next one will be 17 if it's worse or not. And then Burns, you're correct that basically everybody kind of dumps on him as didn't control inflation. So he's considered one of the worst. I mean, according to Trump, Jerome Powell is, but I don't think that's quite fair for all the. I mean, maybe he's right, but I don't know.
Burns this guy is just taking the hits left and right.
All right. Let's jump to the markets. Obviously, we talked the other day about being, the market's been positive. The big questions we get from a lot of advisors, we've seen going into last year, we had 2 great years. We had a 26% and a 25% of the market referring to the S&P. Could 2025 be another good year? And, everybody debated, and we fell on the positive side of things. We were more positive, and the markets, I think surprised us even. It finished up almost 18%. So the question, can we have a 4th year of positive returns? Now, I went back and got some stats, and it looks like we've had 8 periods of where there's been 3 years or more of 15% gains for 3 straight years. Does that surprise you guys?
Yeah, it does.
I was shocked, but that's a big number to me, it seems. So the question is now, we always use history as a guide. So we've seen 7 prior periods, and it's kind of mixed results. 4 of those periods were fairly positive, and 3 were negative. So on average is about 12%. So the question for you guys, what do you think this year brings with a little history and stats for you guys? We'll start with Kyle.
I'm like mesmerized by this table here.
It's crazy, isn't it?
Well, so it's basically years 1, 2, 3, and then the fourth year. The first couple rows here are World War II, like in the thick of it. 1942
Yeah, you wouldn't
was a
think
plus
with
20. 1943 was a plus 25, and 1944 was a plus 20, and then the following year, 1945, was 36. Whew.
you wouldn't think that, right? During a war that it would
Well,
be,
I've seen RBC has a really interesting chart out in Lori Calvasina's deck where it shows the drawdown in like big period. Has anyone seen this?
Mm-mm.
I'll send it around. It's very interesting. So it's basically it's like a V shape in that, and it doesn't align with what that shows at all. It's basically like 1939, 40, 41 are just
Straight down.
nosedive,
Yeah.
and then it does climb back up. It bottoms at the end of 41 during the Allied kind of invasion. But that's interesting. So yeah, I'm surprised by the number for this year. I mean, there's so many different things going on. I'm just trying to parse, like in the 90s here too. You had, I mean, there was, during Clinton, 95, 96, 97, the fourth year, 98, it was plus 28. I mean, that's a mega number.
yeah, we had a run from 96, 97, 98, and then you go
I was trying to
97, 98, 99.
go into the Wayback Machine. I'm like, what was happening then? You had tax policy that came in. You had fiscal surpluses for the first time in decades.
Yeah.
What else is going on then? What was driving markets at that point? It was not quite the lead up to the tech bubble. I mean, the internet was.
Well, I think you were getting there
new.
though, right? I mean, you were getting the tech.
Yeah, animal spirits were starting to grow,
I
but it
mean,
wasn't a
look at-
mania.
I mean, if you look at the chart, right? I mean, you got 95, 96, 97, 98, 99. We're all
Yeah, and then 2000 was a bust of minus
Yeah.
9.
so I think you get a good portion of the tech run up.
Yeah, I suppose, for this year, based off what we saw yesterday, I mean, there was blood in the streets, right? I mean, it was like Anthropic coming out with the legal kind of business efficiency technology or whatever. It just slaughtered all the software as a service. I mean, all of them were down 10+%. So I don't know. I feel like it's kind of a coin flip based off of my gut reaction, which is anchored heavily from yesterday's news, which is wrong.
So yeah, I was
for
like,
sure.
okay, that's data point of one.
Yeah, data point of one. So I don't know. Hard to say.
All right, Lisa, he's going with the hard to say. How about you, Lisa? What do you got? Any predictions? I mean, the table is interesting that we just talked
Yeah,
about. So.
it is. And I remember us talking about the exact same thing last year at that time, like after 2 such great years of plus 20%, can we pull off a third year? And it was basically the history suggested, yes, it's nothing. It didn't happen all that often, but it's, nothing too surprising or completely out of the unusual. And now we're like, okay, and can we do this a fourth year? Which around like 15%, that would be the fourth year of double-digit growth, which is huge. But we see it's already coming down, right? I mean, we saw that 23 was the strongest, and 24 was a little bit lower, 25 even more lower. But even if we come down again a little bit, we're still above average pretty much, which again is another discussion. We never get average years, right? So that's usually above or beyond that. I think we can. I mean, there's a lot of, to Kyle's point, a lot of uncertainties out there that can throw a wrench into. But I think what we saw, like starting this year with small cap outperformance, broadening out, more value starting to outperform growth, which we haven't seen in a long time, but kind of we're waiting for that. I think that could bode for, okay, we temper a little bit the expectations down, but we are not falling off a cliff, and it does not have to be completely bloody the whole year. But other companies are start participating, so it's a little bit more tempered growth, but still not falling off a cliff and not be negative. So I think we can pull off another great year, probably more volatile, as it was
Bring your
getting
umbrella.
over the years. So probably keep the umbrella that we were talking last year, even more so probably this year. But yeah, why not?
Yeah, why not? Tyler, thoughts?
Well, we were talking to, I think it was State Street, Mike Aroni. He had mentioned he was comparing the current market to the 1995 to 99 era.
Yeah.
was kind of what he was comparing it to. So, I mean, if he's right, we're going to have another solid year.
Mhm.
And I mean, just based on the chart alone, you have more risk to the upside than you do the downside, right? Like your fourth year, 36%, 18%, 28%,
Those are big
21%
years on the fourth.
versus
Yeah.
the fourth year being negative is only -8, -1, -9. I mean, nobody wants to be down 8 or down 9, but
If your upside is
I mean, if
higher.
I know none of this is statistically important, because you only have 7 periods, but this would say that you have more risk to the upside than you do the downside. And if we are in that 95 to 99 era, yeah, I mean, maybe you are starting to get to that AI-esque bubble, and the software service names are getting hammered because you've got Anthropic coming out with different stuff, and XAI and ChatGPT, like all these large language models are going to continue to create new services. So maybe that does let the air out, but then you still have semis, you still have companies that'll gain efficiencies from this. So I think your winners might rotate, but I think you can still have a strong year in the market.
Yeah. I think you summed up the last sentence. That's kind of how I feel. I think it'll be a rotation, but I still think there's enough good stuff in the markets that we can grind higher. And I like the stats that we have a little bit of a tailwind. So we'll see.
The other thing to point out too is earnings expectations for the S&P are still
14%.
14%, which is typically a very good backdrop for the overall market.
This quarter alone, the expectations for 8, I think we're so far halfway through, and we're doing about 11% growth. So that's a pretty big number.
And small caps, which granted they're a small portion of the economy at this point, they're plus 65 is expectations right now.
65% growth?
Yeah.
That must be on the profitable
from
one.
from minus 10.
Okay.
Well, so
for
I mean,
the Russell 2000.
Maybe you don't get the big 15, 17, 20, 25% growth. Maybe you get more moderate growth in the market to kind of grow into the valuations that we're sitting at right now.
Yeah.
Sure. All right. Well, let's kind of elaborate a little bit on the big announcement last week, which kind of moved markets, whereas the announcement of the new potential Fed chair was Kevin Warsh. So the markets reacted pretty strongly, especially in some segments. Lisa, do you want to kind of give your thoughts on kind of the announcement, any kind of pros and cons, kind of what have you heard, read, kind of thoughts on the new potential Fed chair?
So, I mean, we're waiting for that for a month now, right? So it should not be a surprise that we finally
the candidates kind of bounced around, though, like the odds and the probabilities.
I'm kind of a little bit surprised by this candidate, to be honest. I mean, he has a strong track record, both on the he kind of had his pedigree from JP Morgan, so he's very well versed there. He was the youngest Fed governor ever during the financial crisis, so he was in the thick of it, and so I think he has strong experience and skills from that side. The only thing I think that markets are a little bit uncertain about is, okay, what will be his thinking at the end of the day? Because that bounced around in the past a little bit, right? He was always a little bit more hawkish, or seen as that. But now the president wants interest rates lower. So he kind of turned his commentary a little bit when once he dropped out of as the Fed governor, criticizing the Fed Chair Powell for not, and he changed kind of his narrative a little bit, which I think the market is a little bit uncertain now. Okay, what Kevin Warsh will we be getting, especially when there's more uncertainties around Fed independence. So I think it's a little bit more uncertainty around, okay, how will he govern at the end of the day, right? Because there was like a strong shift in his commentary and what he thinks about the world and how he thinks about the world. So that will be for sure interesting to see. But again, it's still a committee, right? He has to,
get consensus of the group.
Get consensus of the group, but still, his tip on the scale is a little bit higher as the Fed chair. So it will be just interesting of what person we are getting as there are more
Kyle?
contradictory commentary.
Yeah, I think the the committee comments are the right one, right? And he probably will be able to put his unique flavor, the additional little weight on the scale. But in general, you've got to build consensus, and I think it's going to be a lot more of the same in terms of, Fed policy. I think, we had JP Morgan in yesterday. I think those comments were right. And the comments were, there is, probably 1 to 2 cuts on the table versus 3 were expected kind of late last year from the sell side. And there's probably risk to the downside being 0 cuts, depending on what we see in terms of data. So I don't know what the market's pricing, but there's a lot of things to balance for the new Fed chair coming in. I do hope that they go back to the kind of the ways of old, and that is not being hyper telegraphed or precise in terms of guidance. That whole horse and pony show, it drives me nuts because
I don't like it, but a lot of investors do.
They do, I guess, but it to me it's more endemic of the short-termism of the market. It produces unnecessary volatility. Everybody's so short-term as it is anyway. All the fast money, all the day traders, all the odd bets, all the 0 DTE, all the apps in your pockets. Everyone's just, it's like, I don't think it's healthy for the market structure over time. So hopefully they go away from that.
All right. Tyler, you mentioned interest rate cuts. You and I had
Yeah.
many a debate earlier last year. So I thoughts on Warsh, and then kind of thoughts on kind of Fed cuts.
I thought it was an interesting pick just because he's not going to be known as the guy that's going to take marching orders from Trump, which I thought was really interesting. Because those were the candidates leading up to this, was people that would probably take some type of direction from Trump. And at that point, that's where I think you've seen a lot of the US dollar decline, a lot of adding of volatility to the markets because of where is that Fed independence if they're taking that marching order. So I really thought this was an interesting.
Yeah.
And I don't know where his head is going with this. And maybe it's the fact that, and this is just my own opinion, I don't know that Trump really wants to have oversight or reduce Fed independence. It's more of a political game, maybe, and saying I'm fighting for my voter base that put me in office to try and get interest rates lower, knowing that there is Fed independence, knowing that there is the committee, and it's more of kind of trying to fulfill his promise, but he can't because there's that line in the sand that he can't cross, and maybe he wants to keep that almost. I don't know, just a thought on that.
No, it's funny you say that because that's actually, I agree with you. I mean, you and I haven't talked about that. It's kind of the kind of,
I don't know, and a lot of it is the dog and pony show of Trump, and maybe I'll get heat for saying that, but it is what it is, and he is who he is. But coming into the year, I kind of had a thought of, because of who he had as candidates for the Fed chair, I was thinking it would be more around the lines of like 4 cuts this year, because you have less independence. You have 2 people now on the board. There's going to be some more shakeups on the board that want rate cuts, significant rate cuts. So I was thinking more in the camp of 4 coming into the year, but with
coming in hot.
Yeah. I mean, that gets you to your 2.5 target that Trump wants and a few of the members want as well. But with this announcement, I would actually say you're probably more in the camp of 1 to 2, just because of you now have that line in the sand of somebody that isn't just that Trump disciple that will follow his direction. And you're going to have the people on the board that will continue to dissent and do that. But regardless, you have to have that committee approach, and the Fed chair will give guidance and ultimately leads the rest of the committee on where his or her vision is for the Fed. So the fact that he's in that chair, I think you're going to see a lot less cuts this year. Probably
you think they're front loaded or
no?
At the very end of the year?
Yeah, I think
when it gets squishy.
I think you're going to start to. I think they're going to pay more attention to unemployment. Inflation's been fine, right? You're not seeing the effect of tariffs and the significant price increases to the consumers, at least not yet. I don't know when that ever comes through, but they are going to be focused on unemployment because that does continue to creep higher and higher. And so I think they will wait until it gets to we've seen how delayed the Fed can be. And so I think it's going to get to a tipping point where unemployment does start to move higher, and then they're going to have to be more reactive than proactive.
So you're saying it's not transitory?
What, unemployment
Yeah.
going higher?
That was a joke about the inflation
Yeah.
from
No.
4 years
we
ago.
got that.
So I think they will wait to probably the last 2 or 3 meetings of the year and wait and see where unemployment goes.
Yeah, I think you guys covered it well. The only thing that we didn't discuss is I think he's been on kind of record that the Fed balance sheet's too big. So less quantitative easing, which generally speaking, investors like. It's a little bit more money in the system. So I think that in the short term is a negative, but I think the longer term is a really good thing. I think that's kind of what Tyler was kind of, maybe the US dollar gets stronger. You get the Fed out of the game, kind of what you pointed out, maybe get the Fed out of the markets a little bit, I think is helpful, Well,
and if they do balance sheet roll off, trying to reduce it, that means mortgage rates are going to be higher.
That's what I mean. So you're kind of fighting. That's what's interesting that Trump actually picked him because he's certainly not the candidate that most people expected, at least to be the most Trump-like. I think Kevin Hassert probably would have filled that void of kind of being the person that Trump had the most input with. So I think it was right now for a 1 week in, I think it's an interesting pick. I think it was probably a high quality pick, and I think that's why the market reacted a little bit. And then now, what does that mean? That being said, if what we talked about, how does that impact how we manage our portfolios, the bonds, the dollar we talked about, precious metals? There was something to be said on the precious metals trade last week. But Tyler, let's start with you again. Is there anything that from managing portfolios and looking at that we need to consider changing, or kind of especially on the fixed income side of things?
No,
or
I mean,
10-year trend, 10-year treasury yield?
Fixing them, certainly there's some rotations that you can make in a fixed income portfolio when it comes to interest rates. And so with this pick, less cuts, and you've got decent economic growth, you still have inflation. So ultimately, I think it does put some pressure on the 10-year treasury and the longer end of that curve moving higher. Now we're sitting at about 4.2, 4.25 right now. Do I think that goes to 5? No. But I think you could see it push up back to that 4.5, kind of where we were last year, bouncing around for quite a while. So at the end of the day, if you have a decent amount of duration in your portfolio, it's not going to kill you. So I don't know that you really need to do too much. Where I would be more concerned on is on the credit side of things with all of this. If we are going to be going into more quantitative tightening or balance sheet roll off, there's going to be less liquidity out there, which means your credit is going to start to widen. Your credit spreads are going to start to widen. So I'd be more weary on the credit side of the fixed income portfolio and probably shift a little bit away from that, maybe into more of, which is kind of where the GI fixed income total return portfolio is sitting right now, is more in like mortgage-backed securities, in asset-backed securities, CLOs, more short duration type of stuff that gives you some credit exposure, but you still have the assets that back it up. And then be more in the treasuries too, rather than investment grade.
Kyle, you see anything, especially on the stock side, or value, growth?
Yeah,
small
I mean,
cap, large cap. Is it any impact for you?
Yeah, I mean, I would just, before going into that, I would say, on the credit spread side, just thinking about how I totally agree. I would say with spreads being as narrow as they are, they haven't been this narrow in decades. So the expectation is that they do widen. So I think your comments on positioning make a ton of sense there. On the value versus growth side, I mean, we're already seeing it start to unfold, right? I mean, there's a 14% spread that's opened up since the beginning of the year between value.
What was that chart you sent this morning? It's crazy.
Yeah, that's crazy. So it's value as a factor is worked basically in terms of like the buy rate has only been this wide over growth in the bear market of 22 when AI kind of before that took hold. And then before that, it was a dot-com bubble. So value has roared back in a dominant way, and we've seen the air come out of the Mag 7 in a meaningful way. And then yesterday as well, with software, stocks and everything under pressure. So we're seeing the broadening out. We talked about that on the podcast last week. And you're seeing small caps. We talked about that at the beginning of the year. So everything is, money's starting to move into cyclicals, and with the rates doing what they're doing, I would anticipate more of that. I think mid last year, we had a podcast talking about the zombie stocks, and I kind of alluded to it earlier in terms of the earnings expectations. Russell 2000 was -10 last year on the earnings expectations, and they came in about that. And they've come up a little bit, but still pretty poor. And this year, +65. If we looked back, 6 months, if we rewound and looked at that exact chart, expectations were a +40, and now they're +65. So, re-rating of expectations has meaningfully come up, and people want to catch a hold of that. Valuations are really in the dumps, and cyclicals have not worked. And even defensives, some defensives that, you think about staples, you think about healthcare, and we've seen, it is a stock picking market for sure. You don't want to catch a falling knife for sure, but there you have to do your homework, and you have to look and be aware of what's out there. Cause I think that it's the best time it's been for stock picking in a long time. And I'm excited about that.
Good. Lisa, let's switch gears to a little precious metals guru. So how does the announcement kind of potentially change things? Obviously, there was a little bit of volatility the next day after the announcement. Kind of talk about any trades that you've done recently.
Yeah, well, the precious metal was the star of the show last year. And also coming into this year, especially silver in the second half year of 2025. And then especially since December. And I mean, I think at this levels, when you look at the chart, there does not have to happen a lot to unravel that.
Yeah, I think on a 5-year chart, I think I ran it back just the other day before this announcement.
Yeah.
I had a presentation. I think it was S&P was up 94%, gold like 160, and silver was almost 300. It's crazy.
Yeah, it's
performance.
Crazy. Yeah. So it started in China with a lot of speculation and a lot of, unraveling of that. And obviously with a little bit stronger dollar after the announcement, stronger dollar is generally bad for metals. And yeah, I mean, we made a trade. So we got out of our silver exposure, which was 25% of the overall portfolio.
Nice.
Sold
When did you get out of it? Before the announcement or
Thursday.
after?
Yeah, before.
Oh, that was
So we didn't
timely.
catch a lot of that downside, or nothing of that downside on Friday, which was the second
Top
largest.
ticked it.
Wow.
Which was the
Where's the
second.
clap button, Lisa? Do you have it? I don't know.
I don't know. I messed it up last time.
Yeah,
So
good
let's
point.
let
We better not, yeah.
Last time it was not a clap, it was something else.
It was crickets last time.
Yeah.
Right. So that was good. It was the second largest sell-off in silver's history.
Yeah,
Since
going
the
back to the
80s.
80s or something.
Yeah,
like that,
right.
Wow.
Also for gold and palladium, it was not a good day for all the metals, but silver was hit the hardest. But that was the most speculation was happening in silver. So I guess that was healthy to kind of clean that up a little bit, and going forward to kind of bring down expectations and let fundamentals drive the story again, and not some speculation. And I think when teenagers starting to discuss silver bets on Reddit, I think then it's time to
take a step to the side for a little while.
Right, yeah, because no one cared about silver or metals for the longest time. No one cared about that for decades, and now all of a sudden everything is about how to best trade silver. So that is a good indication to take a step back. I mean, we had some relief performance in silver and gold
This week,
yesterday,
yeah.
and as well today before they open. But there can be more volatility for sure. So
it's crazy that they're having 5, 8, 10% moves daily. I mean,
Yeah,
this used to be a
yeah.
pretty steady eddy, even if it's a
Even
safe
like
haven.
gold
But I
has
mean,
like-
how long is it be considered a safe haven if you're getting 10% moves daily
Yeah,
in
right.
something?
I mean, gold also lost 9%
Yeah.
on Friday, which was also its largest or second largest move since the 80s. So that is certainly nothing unusual anymore
Yeah.
to have such large swings. So
Lots of stuff to think about. So let's wrap it up here. Something really quick and fun at the end here. Super Bowl is this Sunday. It's going to be, hopefully the weather's a little warmer in Minnesota. We've talked about how bad it's been here cold-wise. Any fun Super Bowl plans, Tyler, or anything you do, parties? You got little kids at home, so you're in that age. You're probably not quite doing. No, nothing.
No, I'm not like a big fan of either of the teams really. So I'll probably watch I'll have it on in the background.
What
and
teams
I'll
are
probably
actually
just
playing?
Oh boy, I was just gonna. So we have Seattle
Seattle
Okay.
Seahawks, and then New England Patriots.
and Seattle's favored by 4.5. What? How about a prediction there then, Tyler?
I think Seattle takes it home.
All
As
right.
much as I don't want to see, I mean, I do, but I'm a little jaded that Sam Darnold is the quarterback
Yeah, Minnesota Vikings fans just feel hurt.
because he was our quarterback last year.
What's new? Isn't that the default?
Pretty much.
Yeah.
Kyle, what do you got? You got a Super Bowl party? Anything? You got kids and you got
Yeah,
friends and
we usually go to the lake for dudes weekend.
what?
This year not happening. So
No,
it's
that's
unfortunate.
disappointing.
It's disappointing. So
Is
it's gonna be
that because the two teams in it just wasn't worth the effort?
yes, it's Sam Darnold.
Yeah.
Really, no, no. It just didn't work out for timing. So, but I'll probably pull a Tyler and have it on in the background.
Yeah.
But
No.
Watch
I'm
watch some of the ads. Watch the halftime show.
Yeah. How about the prediction?
I'm gonna say the Seahawks.
All right. Let's go, Lisa, since she doesn't even know who was
Well,
playing.
that's a lot of boringness happening on the
Yeah.
team here. No
Mhm.
parties. Well, I didn't even know who is playing, so
Yeah.
That's my prediction.
So
There's
you're gonna have a
none. I
rager?
have no idea.
It's like, is it this
you
week?
better call the Patriots just to hedge the.
That's
Yeah.
right.
Yeah, let's
team's
do
bet.
that. Might as well. I don't care. Yeah, I'm not a big. I still don't know the rules, so I have no
Mr.
idea
D
what's
is not
going on.
like
He watches it, yes.
Yeah,
so
so-
I'll probably be in it for the fun.
mean,
Unfortunately, but
he's become full Americanized that I assume he's got to be front and center watching Super
I mean,
Bowl.
he already watched it in Austria because it's interesting. No one cares, not no one, but not a whole lot of people care about football over there.
Mhm.
It's not a big thing in Europe as a whole. But for the last, I guess, decade, there is like the Super Bowl itself. And again, no one really knows what's going on. No one really cares the whole
Yeah.
season. And then Super Bowl, there are watch parties, there's public viewing and
Oh,
all of
really?
that. Like
Well, that's
literally there's
interesting.
big public parties just for the Super Bowl, of
Hmm.
course. But it's getting larger and larger.
I suppose it's kind of like the World Cup.
Right. So you do not care for it, and then you just
Then you
just
watch
the
it.
That's like
real
how we
deal.
watch
Yeah.
it here.
Yeah.
Yeah.
You know, same thing.
So it gets larger and larger over there as well, but I never cared for it.
Yeah.
Probably watch like all of you halftime show. That's interesting, and then some ads and stuff. But that's probably it for me.
Yeah.
How about
Sa-
you, Keith?
Same. I mean, unfortunately, the two teams have zero interest in either of them.
Mhm.
But I'll watch it because it's Super Bowl. But
Yeah.
I won't watch it intensely, and I'm not betting on the game, so I won't really care. But
Mhm.
I would think this. I'm in Tyler's boat. It's going to be hard, but I'm sure the Seahawks will win, and then it's just going to crush Vikings fans a little bit more. So
Mhm.
that's
It's
the way it
bad.
goes.
Was it not like if that was the quarterback last year? Did the Vikings not have like troubles with the quarterback this year? I
Mhm.
probably put salt in the wound right
Yeah,
now.
thanks.
It's every year.
Thanks, Lisa.
That's
We actually had
everything.
it. Yeah, he was 14 and
Mhm.
3 the previous year, and we said we didn't need him. We got this.
Well, you can
Well, we
say,
tried to keep him, but it was under the impression that we were going to start JJ McCarthy
Yeah.
regardless, and so he was
I'm out.
basically said, "Peace out."
Mhm.
That's the way it goes.
Well, that's the way it goes.
And that's the way it goes. Hey, everybody, stay tuned. We got a
Oh, yeah.
special edition coming out tomorrow.
We teased it for the
We
last two
did.
times, but
Mhm.
tomorrow it's
We should have
finally
opened with
happening.
that.
Yeah, we should have. Well, we closed with it. So
Yeah.
Mhm.
everybody that's still listening, stay tuned for another episode.